Do you hear that sound? That's the sound of chaos. That's what the New York Stock Exchange floor sounded like in the 80s and 90s. Hundreds of professional stockbrokers buying and selling stocks and options, many of them hoping to make millions on the perfect trade. Lots of them going broke. These days, stock exchange floors are pretty quiet. Most trades take place online. You hear that sound? It may sound different, but it's still chaos. What we're hearing isn't professional stockbrokers. It's teenagers on Reddit hoping to get rich trading stock options with iPhones. But here's the thing. For many of them, it's working. I'm Jeremy Fisher. This is The Awakening. If you bought Amazon stock 10 years ago for $250 and held it until the end of 2020, you'd have gained over 12 times your original investment amount. Stocks owned in companies that grow go up in value. That's how people make money on stocks. But lots of people don't want to wait 10 years to 12x their investment. They'd like to 12x their investment in one day, maybe even in 1 hour. That's where high-risk stock options come into play. The most common stock options are calls and puts, contract agreements to buy or sell 100 shares of a stock at a predetermined price in the future. If you buy calls and the stock goes up, the call value can go up much higher. If you buy puts and the stock goes down, the put value can go up much higher. And if a stock goes up way higher than the market expected, your call can become much more valuable, often 10,000% more valuable. So a $100 investment timed correctly on the right stock could turn into $1 million. And that's the carrot hung right in front of the nose of a group called WallStreetBets. I'm sure you've heard of the social media site Reddit. It's the 18th most visited website in the world. Reddit has 300 million users or so. If you scan Reddit, you'll find a subreddit, a group within Reddit, for nearly everything. There are online gaming subreddits, there are subreddits for pet owners, there are subs for investing, and then there's a sub called WallStreetBets, also known as WSB. What started out as a small group of day traders looking to get rich is now a sub that has grown to over 2 million members. The majority of WallStreetBets members use apps to trade stock options. Members of WSB pride themselves on their stupidity, their vulgarity, their recklessness. They've been called homophobic, misogynistic, and everything that's wrong with Wall Street retail traders. They call themselves autistic and brag about spending the winnings they get from stock bets they place on yachts, cocaine, and hookers. If this sounds a little like the movie Wolf of Wall Street, that's no coincidence.
It's his first day on Wall Street. Give him time.
Mr. Hanna, you're able to do drugs during the day and still function, still do your job?
Well, how the fuck else would you do this job? Cocaine and hookers, my friend.
The Wolf of Wall Street is held in high regard among WallStreetBet members. Most top-ranked posts within the forum share wins and losses, often totaling hundreds of thousands of dollars. For the past several years, the number of loss posts, often referred to as loss porn, have far outweighed the number of winning posts. This isn't surprising considering the risk-to-reward ratio for trading options is extremely high, especially if you bet the farm like many WSB members do. According to Forbes.com, more than 90% of day traders lose money over the course of a couple years. And the higher the risk, the higher the failure rate. Options that expire before the stock moves the direction expected expire worthless, and those that buy options on margin, in other words, they borrow money to buy them, can be left with no equity in the company or stock, only debt. This is the reason why members call themselves autistic. They say they're fully aware that what they're doing is risky and unwise, but Like gamblers in Vegas, it doesn't stop them from continuing to roll the dice. The term YOLO, you only live once, is used as a verb when they YOLO their life savings into a risky bet. And every once in a while, it actually pays off. The user Anonomon bought 2,000 Tesla call options over the summer of 2019. The options were 23 cents each, which means Anonomon's total bet was around $460. Well, in 2020, Tesla's stock rose around 800%. What were Anonomon's gains? Around 205,000%. Anonomon's $460 bet had become $926,000. Anonomon posted the winnings on WallStreetBets. The post was extremely popular, made it to the front page of Reddit, and swarms of new people joined the ranks of WallStreetBets. Something about WallStreetBets that's interesting is it taps into a basic human desire to get rich quick. Imagine seeing someone post a screenshot from their Robinhood account that shows they were able to buy $1,000 worth of Facebook options that over the course of the week have grown to $10,000 or even $100,000. For most people, that's life-changing money. And earning that in a week? It's not surprising that the sub has grown as quickly as it has. Options trading is hard though, right? There are candlestick charts and stock deviations, delta and gamma calculations to evaluate option prices. There are all kinds of aspects to options trading that can take years to understand. So, how are people trading options on Reddit so easily? Well, apps like Robinhood. Robinhood doesn't bog you down with the gammas and deltas, though it does have that feature. With Robinhood, if you want to buy an option, you just tap the button and bam, you've got yourself an option. They have educational tips, frequently asked questions for new traders. They'll even show you quotes on profit potential. Today, trading stock options, something that used to take a really long time to understand, can be done in 1 minute from your iPhone. Which is why most people on WallStreetBets don't have to be professional investors. In fact, the average age of WallStreetBets is estimated at around 19 years old. This is a very significant event you and I are watching in the history of the stock market. One that's probably going to impact the way the stock market works for the rest of our lives. In the past, only educated and experienced Wall Street brokers and institutional investors were making daily stock option purchases and sales of any value, aside from a very small number of day traders. And stock prices are based on supply and demand. So what happens when purchasing power by non-institutional investors grows and average Joes start pouring millions of dollars into high-risk trades as if they were standing on the stock exchange floor? Well, things can get wild. Stocks like GameStop can be driven up 800% in a week. We'll talk about how that happens, but we're jumping too far ahead. First, let's think about something. Imagine being a 19-year-old college student making no money with $500 from a student loan just sitting in your bank account waiting to buy college books in the spring. You hop onto Reddit and see a top-voted post on the front page from someone just like you who happened to time the market right and turn their $5,000 into $50,000. Are you just going to leave that money in your account while you spend the years it takes to learn how to trade stock options before you put that money in your Robinhood account and try to make your own 50K? The 19-year-old version of me wouldn't. Lots of Robinhood users aren't either. In the past 3 years, the number of Robinhood users has grown from 2 million to over 13 million. And it's a safe assumption that the vast majority of them have no idea what they're doing. But on WallStreetBets, no one really cares. Flying the flag of blatant stupidity offers with it some level of forgiveness. With WallStreetBets, you're allowed to make mistakes. You're allowed to be an idiot. Your comments and posts are even upvoted if you share how much money you've lost being an idiot. Sounds like it's all fun and games, right? Well, when it comes to gambling, there's always a dark side. And for some people, the losses aren't fun. They're even downright unbearable.
We are learning new details tonight after a 20-year-old Robinhood trader took his own life.
Alexander Kearns died at the age of 20 in June 2020 by suicide. He was a sophomore studying management at the University of Nebraska at Lincoln. Alexander was surprised to find that his Robinhood account showed that he had a $16,000 balance, but also a negative $730,000 cash balance. Alexander thought he was $700,000 in debt. Reportedly, the negative balance was just a visual bug. In reality, Alexander actually had $16,000 in his account, but he allegedly misread the data, and before someone could correct him, he took his own life. I'm often asked if stock trading is a good side hustle. I find it hard to answer the question directly. It's impossible to know all of the factors that contribute to a person's suicide. But Alexander's story might be an important cautionary tale. It could highlight that there's a big difference in investing and gambling, and people who gamble but think they're investing really need to understand the risks. Investing is a principled, patient, thoughtful way to take some of your money and earn more money with it. It's about putting money into something that is likely, though not guaranteed, to give you a return. People invest in the stock market because over the course of its life, the stock market as a whole has gone up. Investing is a balance of risk, and the more you know about lowering risk, the better investor you'll probably be. To put it simply, investing is a get-rich-slow strategy. Gambling, on the other hand, isn't like that. Gambling is a high-risk roll of the dice. It's stressful. With gambling, the odds are stacked against you. As we've heard, the house always wins. That's not just true in casinos, because over the course of a lifetime, nearly all gamblers lose money. In the same way, most day traders lose money. Gambling is a moral gray area. Some people are against it, some people are for it. Whatever stance you take, I think it's important to know the difference between investing and gambling. It's not clear to me that members of WallStreetBets actually know. When I watch The Wolf of Wall Street, I see it as a tragedy, not a comedy. It's a great way to get yourself divorced, nearly overdose from doing drugs, break the law, and go to jail. To many on WallStreetBets, it's not a cautionary tale. It's a playbook. Would I suggest trading options with Robinhood as a good side hustle? Maybe if you know it's a gamble, you learn a little bit about what you're doing, and it's money you can afford to lose. That's because it's really hard to know if a stock is going to shoot to the moon. That is, unless you can find a way to drive the price up artificially. And you'd have to find a way to do it without going to jail. So how would you do that? Well, you'd probably need hundreds or thousands of people to pool their accounts together and buy one stock at the same time. And you'd need to make sure the participants were anonymous. And you need to make sure someone told you which stock. And you might need to be in an online group with people willing to make risky bets. Then maybe you could artificially drive the price up in a way to where everyone involved makes lots of money. That can't really happen though, right? On the next episode, we're going to talk about stock pumps, market manipulation, and how thousands of Redditors are testing SEC boundaries in the pursuit of making millions. Buckle up. The story is about to get wild. That's it for today's show. If you like this episode, please consider sharing it on your social media feed. And don't miss the next one. Things are about to get weird. If opportunity doesn't come knocking, let's build a door.